Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 9th of January, 2019, and we're about 3:20 p.m. Central Standard Time. I chose this time because it gives you an idea of the last trades as we're getting into that last half hour. This will be where the settlement prices and the stock indices came in. You're going to be in silver. This last price is about 6 cents higher than where it settled. Gold is right near the highs of the day. And a lot of this is the end of the day is if you're watching the drama that's happening in politics. Last night, I was pissed as can be. I watched the president take away 8 minutes of my show time. Then Nancy and Chuck take the rest away, and nothing got done. It was at least more exciting today because the president walked out of a meeting, and I don't see how he's left without invoking his emergency powers and getting the government up and running. I mean, at some point, you're going to feel the pressure. I do. The IRS does. There's got to be some solution. Fitch rating systems today said if by March 1st the government isn't open, U.S. credit ratings may come down. So you're getting all this. But the markets know this. They know the political game. And I am not a politician. I am not preaching my side one way or the other. I saw a comment on our YouTube page. Guys, it's not what it's about. If you think this isn't as important as the Fed, you've got a mistake right there. Because you're looking at dysfunction, and this is how this government's going to operate to the next election. There'll be more fun because there's probably going to be an impeachment process that they try. Today we saw the Fed come out. Very important. The Fed's notes came out this afternoon, and they're doing just what we thought. It's a watershed event, and it's one of the reasons probably, I don't know every time the markets go up and down what it is, that the dollar's a lot weaker today, the euro's up, in fact, most currencies up against the dollar. So when we take a look at what's going on, in the stock market, we've had a neat prolonged rally. I was on Fox today, and one person was talking about Chinese trade being the reason for it. First off, you did get a Santa Claus rally. Where I went to school, there's 12 days of Christmas. So if there's 12 days of Christmas, and we look at the 24th, 25th as to where the market bottomed, you had a Christmas rally in theory. We all like to see it earlier in the month, but you got to bounce. That does not mean this market has turned the corner. It hasn't. Anyway, I look at the longer term chart on weekly closes, you have to take out this area here to convince me or create a new retest of these lows in some manner and then come through some highs. So I'm more in the camp of other chartists that think it's a nice bounce, but I question what it is. As you can see on the daily charts, this is going to be your key area, all the way back to where this market had the outside day up, and this is January 4th, 2438.5. You can see how it's a swing line low as well, because that gave you the pattern of higher lows, higher highs, which is bullish. What would break that pattern under the current formation, and formations change, but on a daily chart, it's a day at a time, is taking out 2438.5. The market has been able to stay over the 18-day moving average of closes, which gives the market upside bias, putting into play that if the market could continue the rally, the 100-day average is way up here, but I'm more concerned with where the nearer averages are or the Bollinger Band. The 200-day moving average of closes is right here. So we've got the 100 and the 2-day way up at 2752. Right in front of that, though, in fact, quite a bit in front of it, 100 points, is 2652 right now, the upper Bollinger Band. To me, that is a resistance point in the market. If the market should fall back, support could come back in at the 18-day average. And as I said, just under what we're seeing, you'd have to take out 2438.5 to negate things. Are we overbought? Every measurement, according to slow stochastics, is overbought. It hasn't even begun the process in this indicator of converting itself from overbought to locking in a bull trend. So it's a nice bounce, powerful, big, hard to control because the ranges have been so big. The NASDAQ is the same story. The higher lows, higher highs. You've got your 200 and 100-day average right by each other. The Bollinger Band is going to drop again tonight. Now the question is, where does that resistance come in? So far in these two charts, overbought, in uptrends, bias to the upside, Bollinger Band, first objectives if they can reach there. Slow stochastic study, overbought in the Dow, same pattern. 200-day, 100 resistance, first one at the 24,560 level, the upper Bollinger Band. And in the Russell, the one most likely to make the first try to at that number, because it's getting so close, would be the Russell. Now the Russell, as you've heard me say over and over, it's gotten a strong bid because when you look at world trade and all that's going on and the way that this is comprised, a lot of domestic companies, so it gives you a little bit of protection against world trade. And I think that's what some traders did. In addition, this market just led the way down. It was a son of a gun to the downside. But it too is overbought, support all the way back at 1364, and you can see the resistance. In the VIX, I mentioned yesterday, and I'll say it again today, do we have enough power to get down to the 100-day in the lower Bollinger Band? That's what I think the bears are looking for. You're so close and oversold, I'm not convinced. We'll see if it happens. In the T-bond market, here is what happens with slow stochastics. Here's a pattern where you've got them locked in. They're staying both numbers over 80. I came up years ago with the founder of slow stochastics, George Lane, and said, I found something unique with it that I like and I use. When you lose that embedded reading, and I teach this in my charting course, often price and the 18-day average make a run at each other. This is yesterday, this is today, you tell me. Let's take a look at the 10-year note. And by the way, you know I'm holding my webinar tomorrow. So in the webinar, if you want to bring up other markets, we can look at them. You got to ask the questions. That's what makes it fun. It's at 12:30 p.m. You need your user ID to get in. And remember, if you didn't get an invite already, call my staff at 866-973-2077 to get in, because otherwise not going to happen. And we are filling there. It's going to be a nice size one. And it's free. As you can see, making your challenge there. 5-year did the same. Look at TLT. It never did embed, to be honest. But look where it fell back to today. So I consider the 18-day average of closes the line in the sand. It's a filter. When the market's up high, often it's a number you come back to figure out what the next game plan is and flip-flop it. When you're down a lot, it can be the number that you go back to figure out what's going to next happen. So an important number as far as I'm concerned, momentum down, trend down, but bias up because you're still over the 18-day average of closes. The dollar index just looks sick. How do I say it? Sideways action for a long period of time, a breakout. Yesterday we saw that the market had come down, and this is yesterday, challenging at first the lower Bollinger Band, got a bit of a bounce. Today it sliced through everything, and that's going to keep bending this band down. Is it oversold down here? Absolutely. If it cleared the 95.61.5 level, it might even get back to the 18-day average. Getting through all this, that's going to be a son of a gun. The market looks to me like a big top, and guess what? The inverse is now starting to happen a day or two later in the euro currency, starting to say this is a bottom. Even with Germany's slowdown and terrible numbers, you're up 105 points today. Overbought, admittedly, now into like the dollar. It's the mirror picture the other way, right? The 100-day average and right through here. But it looks like a breakout. British pound, you couldn't give me 2 cents. Key votes were lowest again for Miss May, yet here you are up. Is there going to be a referendum vote again, or is there going to be a hard Brexit? I don't know, and I don't think anybody knows. When you come to the yen, the nonsense of the day gave the yen a good bid today. Now here's the interesting part. You lost an embedded reading, I believe, right back here. If we take a look, both numbers over 80, that's January 3rd, over 80 January 2nd, and over 80 December 31st. So you had 3 days in a row. You see that? Then the market loses that. As you know, I believe that often means that price and the 18-day average make a run at each other unless it's gained back the very next day, which it wasn't. So you're getting a little correction. Now you got that bounce up. I wouldn't be surprised if the pros try to sell into this market. And yes, it's in an uptrend, higher lows, higher highs. It is a very difficult trade, but This rules the day. Does it have to work? No. So this type of thinking is not for everybody, but figuring out the yen, safe haven buying again, yeah. Gold up today, yeah. Nonsense. People scared with what's going on in the government. Bitcoin, just flashing what? Sideways action. Is it a top or a bottom? Right now, it favors being a bottom, but we'll see if it holds up. In Brent versus WTI crude, it's the Brent that keeps moving up against the WTI. Both markets, as you can see, into a nice uptrend. I'd get concerned against the upper Bollinger Bands, though. After a big run like this, that's often a stall area. It doesn't mean it has to be, but this is what I'm looking at. I think the gasoline market's got, and I've said this, for 4 days. I think it based out here. It's trying its upside, but I'm very concerned that it is overbought. I'd look for resistance to be formidable near that 148.20, but I am not bearish the energy markets as a whole. You didn't get any bounce today in the nat gas, even though you were higher. Keep your eye on this. It's all about when you lose the embedded reading, then you open the door for potentially price and the 18-day average to come together. Right now, who's in control of the market? The bears, until that is lost. That's how I view it. You know, I wrote my silver report, and I'm doing something different with my reports this year. You know, you go away, which I needed a break for a little bit, and I realized, why not do more charts and less writing? And let the charts tell the story, and then I give you the captions and give you my analysis. Well, that's the first of my metal reports of the year that I did this way. To get this, call my staff if you haven't got it. We sent out an email already to everyone on our mailing list. You can go to our website, sign up for it. That'll get you on the list, and we'll make sure you get it. And while you call us or whatever, if you want to attend tomorrow's webinar, great time. They'll get the invite out to you. I'm Ira Epstein, frustrated with government. You have a good day, and I'll talk to you tomorrow.